Hi, I'm Christine Short, Director with S&P Capital IQ Global Markets Intelligence. In this week's Lookout Report, we take a look at how the beginning of first quarter earnings season has fared. The first 2 weeks of the earnings season are over, but investors didn't emerge completely unscathed. Before Alcoa's report last week, expectations stood at a paltry 0.2%. Those estimates took a turn for the worse on April 10th after Chevron released an interim update and indicated that foreign exchange and asset impairment costs would negatively impact first quarter earnings. And the estimates have only gotten worse from there, with misses from big banks such as JP Chase and Bank of America causing the expected growth rate to slide into the red, now anticipated to come in at negative 1.1% for the quarter. Analysts expect the defensive sectors to lead first quarter growth. The telecommunications services, utilities, and consumer staples sectors are expected to report growth. Only one other sector, consumer discretionary, is forecast to report an increase in earnings. Analysts expect that the telecommunications services and utilities sectors will be the overall leaders, with growth of 41% and 12% respectively. The utilities sector has emerged as a new leader of first quarter growth in the last few days, topping expectations for the consumer discretionary sector. All four industries are expecting year-over-year growth, with strength coming from the independent power producers and energy traders, which turned in negative performance in the year-ago quarter. Utilities companies won't begin to report for another couple of weeks, but at this point, analysts expect 22 of the 30 companies in the sector to report year-over-year growth. On the flip side, financials are expected to be the biggest laggard for the quarter. After JP reported on Friday, the growth estimate for the sector plummeted, currently expected to come in at negative 10%. The company missed earnings due to weakness in mortgage originations and mortgage application volumes. Other big banks had similar results on the mortgage revenue front, such as Wells Fargo and Citigroup, but these banks were still able to beat estimates due to strength in loans and deposits for the quarter. Bank of America also turned in poor performance when they reported on Wednesday. The 10-cent miss was due to a steeper than expected litigation expense related to a settlement with the Federal Housing Finance Agency. Revenue estimates have surprisingly remained strong in the face of disappointing earnings. Current estimates stand at 3.6% over last quarter's 1.6% on revenue per share basis. Analysts expect the consumer discretionary sector to be the leading sector for top-line growth, with an expectation of 14.6%. Sales growth estimates for the balance of the year are hovering at around 4%, down slightly from the 4 to 5% level that analysts previously expected. Next week, 156 companies are scheduled to report first quarter earnings. Most notably, we will see several results from the industrial sector. I'm Christine Short, and thank you for tuning in to this week's edition of the Lookout Report.